NCCI has recently published its latest quarterly economics briefing, providing an in-depth look of the current state of the economy and its impact on workers' compensation. Joining us today to discuss the report is NCCI senior economist Len Herc. Len, when it comes to U.S. economic news, there seems to have been some change from last winter to now. What is the story there?
Sheila, consider where we were last winter. We were stuck for some months with an employment gap of about 9 million people. Employment gap is the word we use for job losses. What it means is that about 9 million people were not working who we would have expected to be working in an ordinary year without COVID. So that's still a big number. At the same time, we were seeing a big spike in the COVID pandemic, up to 6 million cases in the US in December. Well, fast forward to March. Now we've got less than 2 million cases in the US for the month of March, 1/3 of what we saw in December. And we're seeing a break in the log jam of job losses. We're seeing them come down to closer to 7 million, a gain of about 2 million jobs. Well, okay, what's really going on? I think what's really going on is that we've seen the COVID vaccines rolling out. The news about them has been positive, and it's created a very strong sense of optimism and of expectation that the economic rebound begun in the first quarter may very well accelerate during 2021. So it's all about expectations. It's all about that kind of optimism. Expectations drive behavior, and expectations for economic recovery are very positive right now.
And can you talk about how jobs are coming back in different key sectors for workers' compensation?
Yeah, the report looks different depending on where you're working. If you're in leisure and hospitality, if you're working in the restaurant industry, if you're in a bar and you're in the travel industry, in a beauty shop, in a variety of entertainment venues, then the recession's still very real. In fact, throughout the recession and continuing now, we're seeing about 40%, 2 out of 5 lost jobs, are in this collection of service sectors. These are sectors that have high proximity and are relatively discretionary in terms of consumption. Now, there we've seen a lot of recovery from last year to this, but that's still where most of the jobs are lost. These people are still having a hard time. These people are still looking for a real recovery. Now, contrast some other parts of the economy, and particularly parts that are important to workers' compensation. I'm thinking specifically of construction and manufacturing. Here you've seen that a great deal of the recovery has already occurred after a sharp drop in jobs at the beginning of last year at the start of the COVID recession. By the end of the year, and now, the situation in construction and manufacturing across the country is looking close to normal. So here we're expecting that to a large extent, 2021 will be more like a normal year in construction and manufacturing than a pandemic year.
Len, a lot of this does sound largely positive, but we certainly are still living with a pandemic. What are some concerns around the U.S. economy that we need to be thinking about going forward?
Well, the big concern is the COVID pandemic itself. It's still ongoing. What we're seeing through March is a lot of positive expectation, but those are still expectations. There's a question of whether they will be fulfilled. So here are the 2 key questions I think we're seeing. First, what happens in terms of infection rates, in terms of the virus itself looking forward? And where we are is the following. We've got about 30% of the population has received at least 1 shot of a vaccine. We're seeing estimations of population immunity rates somewhere in the 79 to 90% range. So we still got a long ways to go there. We're also seeing an uptick at the end of March in new infections in some states, and with a variant of the virus that may be more infectious than the previous variant. So there's a question, a competition, which goes faster, vaccination rates or a potential upsurge in the virus. That's at a high level. Certainly, vaccinations for people are providing a shot in the arm for the economy. But how does that play out? Now, the harder question is going to be this. Suppose that we see an upsurge, a 4th surge in the COVID pandemic going forward. How big would that need to be to really derail, not just dent, economic recovery? Remember, to a large extent, what we're seeing now is not so much economic activity driven by what people are permitted to do or restrictions, but it's driven by what they feel comfortable doing. So how comfortable will people feel in going back to the kinds of activities like restaurants, travel, the sectors hardest hit, that they deferred in the past over fears of COVID? How big would a COVID spike need to be? What does the COVID experience need to look like in order not to disappoint expectations of future recovery? How big does it need to be to really make a difference? Now, there we have some interesting evidence and some interesting insights. Certainly, the economy's sensitivity to the COVID virus has changed a lot from April of last year through winter until now. This is something we talk about in more detail in the QEB, and I hope you'll check it out.
Thanks so much for joining us. And as Len mentioned, you can find the full QEB online in the Insights portal of NCCI.com.